Hello and welcome to the SCI video series to support the Accounting Foundations course. My name is Eric Andrews, and in this video we're going to be looking at the adjustment process. At the end of each month, we need to go through and make some adjustments to some of the accounts that we work with. These accounts are something that we keep track of throughout the month and then adjust the balances based on the nature of the account. These are things like our supplies. In this situation, we order our supplies and use them throughout the month, and at the end of the month we take inventory on them and figure out how many of them we have used. What we need to do at that point is adjust the balance of our supplies account and account for those supplies we used as a supplies expense. This is one type of account that we adjust, and we do this because it's an inventory type of an account. So let's look at how this would work. We started off the month with a balance of $1,100 in supplies. At the end of the month, we took an inventory and determined that we had used $1,000 worth of supplies. Well, because of this use, we've got to do two things. First, we've got to decrease the balance of our account from $1,100 down to $100. At the same time, we have to account for the fact that we've used $1,000 in supplies. So in the center section of our trial balance worksheet, we're going to enter the information in these two accounts. They're set up, as you can see, the same way as the trial balance, where you have a debit entry for the supplies expense and a credit entry to the account for supplies. If we look back to our T accounts, this reflects what we're going to be doing both in our T account sheet as well as in our journal and eventually in our ledger. So let's look at this account with the T accounts. We have a balance currently of $1,100 in supplies. We know we're going to be decreasing that balance by $1,000, and that's going to be a credit entry. So that's going to reflect the decrease. At the same time, we need to increase the balance of our rent expense account by $1,000. So now we have a $1,000 increase in our expense account and a $1,000 decrease in our supplies account. If we look back over at our trial balance worksheet, that's exactly what we see here for the account. We have a $1,000 decrease in our balance for supplies, and this is the entry that is going to be decreasing that balance. And we have an increase in our balance of supplies. So these two here are the entries that we're going to have. If we were to look at this in the general journal, it's going to be a $1,000 debit to supplies expense and a $1,000 credit to supplies. Now when we look at things like adjusting entries, what we do is we look at the general journal and we make an entry for the account name called adjusting entries. This lets us know that anything that comes after this is going to be an adjusting entry. And down here at the bottom, at the end of the month, you can see we have the entry for supplies expense. That is the debit of $1,000. And then the entry of supplies, which is a credit entry, decreasing that balance by $1,000. Obviously, this information now is going to carry through to the general ledger. So if we find our office supplies account, we're going to see that the balance when we left off was $1,100. But here on June 30th, we're going to put in an entry that credits this account by $1,000. It's still going to have the balance on the debit side, but the balance now is only going to be $100. At the same time, we need to come down and put in the entry for our supplies expense. So in this situation, we would find on June 30th, and then we would have a debit entry of $1,000, which would now give us a debit balance of $1,000. Now if we come back over here to the trial balance worksheet, what you're going to see is that we're going to do these types of adjustments depending upon the type of account in the worksheet. We're then going to go back and enter them in the journal, and then finally we're going to update our ledger with those particular accounts. All of this then sets up the next stage of the process in what is called the adjusted trial balance. The adjusted trial balance is where we reflect the balance of the accounts for everything after we've gone through and done our adjustments. The way that this works is if we have an account that doesn't receive an adjustment, we simply transfer the balance from the trial balance column over to the adjusted trial balance column. This is what has happened in most of our accounts. However, when we have an adjustment, as we can see here, we went from $1,100 and we decreased the balance by $1,000 because we used $1,000 in supplies. What that means is we have a new balance of $100. This is important to understand here. We started out with an $1,100 balance, we decreased the balance by $1,000, and we now have a balance of $100. This is going to happen for all of the accounts that need to be adjusted. Let's take a look at one more. In this case, we had prepaid insurance. We had gone ahead and bought 1 year's worth of insurance for $1,200. So at the end of 1 month, we have used up 1 month's worth of insurance, which is equal to $100. That means we're going to need to decrease the balance of the prepaid insurance account by $100. And since it's a debit balance account, we're going to do that with a credit entry. And that means our new balance is going to be $1,100. At the same time, if we reduce the balance here, we need to also take into account that we are going to take this as an insurance expense. So we have two entries again, both for $100, one on the debit side for the insurance expense, the other on the credit side to reflect the decrease in balance. So the new balance over here for insurance is $1,100. Now this is going to continue as we go back and forth through the different accounts. What you're going to see is that on the bottom here where we incurred these new expenses, we actually have a situation where we didn't have any balances before other than our utility expense, but now that we've made adjustments to these accounts and increased their balances, those balances are going to carry across to the adjusted trial balance. So each time we increase something, this now is going to give us a balance in that account, and we move it over to the adjusted trial balance. Everything with regards to the equation should remain the same, and at the bottom of the adjusted trial balance, after the adjustments, you should still have both sides in balance. The other types of accounts are going to be very similar. Things like prepaid rent is going to operate the same way as prepaid insurance. The final account is what is called depreciation. This is a little bit different, and it's something that we haven't covered in depth in this particular class. What we're going to do in this situation is take into account that our equipment has gotten a little bit older. This is something that you'll want to spend some time in, and I'll cover a separate video specifically on how to do depreciation. Look for that, and it should hopefully explain why we do the adjustment the way that we do. Thanks for watching, and if you have any other questions, please reach out to your instructor, and we'll see you in the next video.